Cool. Hello to all the beings that are here. Where is my money? Is a very topical and relevant question nowadays. Let's turn on the... Okay, that's fine. On the brittleness of the financial system, because we all use the financial system. We are not all happy about using the financial system, but we do. And yeah. So, who is this creature that you see in front of your eyes? This one is called Maya. Occasionally also goes by 551724. Its pronouns, etc. It is a burnt-out creature. It has done a lot of cybersecurity stuff for a few years, and now would like to go herding goats at this point in life. Now, mind you, it is 26. It is one of those Fedi entities that beeps a lot. Occasionally has been known to touch grass, right? Volunteer at events and shitpost too much on main. This is observable. Anyways. And relevant to this talk, it is a creature that has worked at a fintech and never wants to go back. So yeah. And this is where the following disclaimer comes to play a bit, because this is... One cannot talk about financial entities without potentially incurring some flack for things one says. So for legal reasons, it specifically asks that none of the contents of this talk are attributed to any of this one's past, present, or future employers. It is currently unemployed, so the present is currently like very easy, but past and future, yeah. It also wishes to specify very specifically that no koalas nor lawyers were harmed in the making of this presentation. This joke is relevant to 3 people in this room. This is fine. So, in 1992, a movie came out, and a scene from this movie that's about 1 minute will be playing in a second, called Sneakers. And Cosmo, who is the big bad, right, was... Hello, is this going to work? Yes. It is just not going to play sound. Good. Oh, because it muted it. the multi...
Problems multiply. What's wrong with this country, Marty? Money. You taught me that. Evil defense contractors had it, noble causes did not. Politicians are bought and sold like so much chattel. Our problems multiply. Pollution, crime, drugs, poverty, disease, hunger, despair. We throw gobs of money at them. Problems always get worse. Why is that? Because money's most powerful ability is to allow bad people to continue doing bad things at the expense of those who don't have it.
I agree. Now, who did you say you were working for?
Oh, that's just my day job. Listen, when I was in prison, I learned that everything in this world, including money, operates not on reality,
But the perception of reality. Posit.
People think a bank might be financially shaky.
Consequence. People start to withdraw their money.
Result, pretty soon it is financially shaky.
Conclusion. You can make banks fail.
I've already done that. Maybe you've read about a few. Think bigger.
Stock market?
Yes.
Currency market?
Yes.
Commodities market?
Yes.
Small countries?
I might even be able to crash the whole damn system.
And on that face of consternation, we move on swiftly. So, Cosmo was making a lot of sense, so that's the guy on the left in the nice suit. Anyways. So this has been used under, like, the fair use under the section 51 citat of the... because this one did about this before. Begin to start with this mess. Very simply, society made 2 big mistakes. First of all, it taught Sand how to think. It had been widely considered as a mistake. And everyone... it then made the thinking sand store records of money in the 1950s-ish, allow creatures to make deposits and withdrawals at machines, allow creatures to send money and pay for services, and then, depending on how one considers this, the opening of the New York Stock Exchange, etc., has allowed creatures to speculate on money. And the worth of money has not recovered. Money isn't real. And now here we are in 2025, and cryptocurrency is a thing. Cryptocurrency has like 1 or 2 good uses, all of them involving recreational or non-recreational use of drugs. Non-recreational being, of course, well, hormones. So a short note on capitalism. There was a shtick that was supposed to happen at about this time, but sadly the chalkboard is not yet open. Objectively, we have a bajillion issues that are basically caused by capitalism, right? None of this would be possible without our sponsor. No. Too bad we're currently extremely stuck with like going to an entirely outside of the system, off-grid economy works at a very small scale, immediately fails as one tries to like do bigger and better because, well, capitalism doesn't want to be made to fail. That's one of its properties. Anyways, Cosmo had this magical sentence in the middle of the blurb that was, money's most powerful ability is to allow bad people to things at the expense of those who don't have it. And that is the bad guy of the movie. Anyways, a longer note may be available after chunks are consumed. Here's where the shtick was supposed to happen, where that creature hands this one a chunk. However, this one promised in the description of the talk to answer a question. Actually, several. One of them being, where's my money? Hear this, we must answer a bunch of other questions, right? And these answers should, if one is a completely normal creature, sufficiently abnormal creature, raise a bunch of concerns and other questions and worries. Anyways. So, sadly, one cannot just explaining all of the background of these questions without giving creatures a slight theory info dump. We will take a it will be short. So how is global finance supposed to function? This is not an Econ 101 class. Never doing that again. But basically, participants in global finance support one or more economic functions. We have the global financial system, which has a bunch of stuff. It can be broken down into three things. We have consumers, producers, and investors. Technically, one could use only the two first, and everything would be fine and life would be fantastic. Investment is where things start to go wrong. And global finance is too big to fail, right? Finance can never fail. No such thing as failing financial systems. Anyways, then we had the 2008 recession. Then we had the COVID-19 recession, which still vaguely recovered. There will be yet another recession coming up soon enough, because that's how the world works. Hello, creatures. It's all going up, but the wages. So everything costs more. You're still expected to, be paid the same amount or even less. This, in paraphrase, sucks. Now, the word too big to fail, beautiful word, that describes many companies, many systems, etc. It is also a statement dreamt up by the utterly capitalism. The system has gotten so big, in fact, that the Financial Stability Bureau, which is like this one major world organism that looks at stuff and goes, that's where the money is, stopped actually indexing insurance providers for big financial institutions in 2020. Why would they ever do that? Okay. Okay, this supposedly works? Good. And so this screenshot is from the Financial Stability Bureau, and one can see that in 2012 they started indexing insurers, and then they stopped. Now that is a fun question. Why? What happened in 2020 that caused a bunch of things to go wrong? Anyways, who even participates in this world economic system, right? Banks. They're very well known to hoard everyone's money. Card schemes, that's you probably all have a MasterCard or a Visa or a Maestro or a Girocard or something in your pocket. Merchants, which are people that want to sell shit. Average issuers, people that want to get creatures to use cards under certain circumstances. Acquirers, insurers, because insurance is a thing. aggregators, and the reader, albeit unwillingly. And there's all this bullshit happening as well. Please hold as we take a slightly longer theory detour. It will still be vaguely useful, and also somehow will involve trains. So how is it supposed to function? And to the first creature who's going to say not, correct. But what is a bank, first of all? Well, depending on who one asks, it is a business. Well, it's not supposed to be. It just became one when they stopped doing national banks. It's a place where one's money is safe. Well, yeah. Spoilers. It is, technically speaking, an institution, right? Allows one to deposit money that will use the money to invest in stuff when that do not have any money, and occasionally allows one to retrieve the money. Occasionally. So long as one doesn't try to retrieve too much of it or is too big of a stake in the company's actual portfolio. Anyways, what even is a bank? It operates theoretically on several principles. Simple principles. One of them actually exists. And that the sum of all the money that one has and that isn't being used is actually greater than zero. This is in theory. Money is used to make more money, right? One has interest, one has placements, one gains interest on loans that one has given out, etc., etc., etc. Money makes more money. This is simple and actually extremely logical. Not. It's a pay-to-win game. Sadly, we're not born to win under this system. Anyways, one of the rules is, of course, that a big enough buffer exists, right? That a not too large amount of customers can just depart on the same day without crashing the bank. Theoretically. The problem is that there is such a concept as whales, or very big financiers in, banks where one will have 5 from one person and then like a bunch of other accounts. And if that 5 billion just walks away, one no longer has any money. And this causes problems. The relationship mesh, right? So there's a word here, correspondence, that is going to be expanded upon soon. But there's a relationship mesh between correspondents, so banks that one can talk to, and suppliers that are strong enough. Suppliers in the technical sense, suppliers in the slightly shadier sense. And then there's the concept of leverage, which basically when a bank aggregates money, it's going to use a portion of that money to either lend it out, or it's going to do things like do stock options, etc., etc., etc. And that money is technically not reusable for the bank's purposes. It technically exists, but it is not. One cannot withdraw it simply. And in simpler terms, it means that if there is too much money that one cannot take out, the institution is somewhat over-leveraged. This is dumbing it down significantly. The institution is legally trustworthy. We're not talking, we're talking other banks consider the institution to be trustworthy. And the institution does or enables this actually is important. For everything else, there's Wirecard. Anyways, that's a lot of principles, right? We can kind of break this down. And consider that there's a bunch of perception incident, right? It's just bad PR, really. Data breach, massive leak, not necessarily of credentials, but like who has an account at the bank, things like that. Or what the amount of money is, or other things. There's also scandals. So we recently had a scandal with not a bank, but where 2 people were caught kissing at a Coldplay concert. That technically there's technical incidents, obviously data breaches on the other side of that, obviously, etc. compliance issues, such as when one does a bit of crime, the structures relevant to stop the criming. At least not in a considerably correct state. There's other things, like external events, like hostile takeover, things like that can cause issues, and being merged into is not great for a bank's image. And then internal events, such as brain drain, people being, well, either leaving or being pushed out or other things, can cause several issues inside of a bank, especially you have to have like, technological knowledge that is relevant. Anyways, to quote Cosmo slightly, pause. Oh, wait. This is generally right, what regulation/regulatory oversight. It's not exactly a do not. It's a here's how to avoid getting to following closely enough. You probably won't get caught. That's not the official line of thing, but kind of what it sounds like. And there's a promise of some consequence. Now, the consequence could be a fine. It could also be a forced closure. One sees much more fines than forced closures. But whatever. So to go off from Cosmos. It's a small bank in Germany, right? The thing is, we have clients that want to send money from somewhere. So from here to here, from here to here, here to here. It's all easy. The problem is, world, one needs kind of a one-to-one relationship to be able to do it directly. This is easy and simple and makes sense. In a small bank, one cannot have this one-to-one relationship halfway across the world. That's just not how the financial network works. And this likely welcome analogy, trains. Just represent everything as a train station. It can be a simple rail network, right? With connections. One could even call these rails. That is also what they're called. And so one can see here that our small bank here has a rail to the second small bank and to a French small bank. And both of those have a relationship to a big bank in Germany, and the German one has a relationship to a big bank in the US, etc. And this relationship has borders, right? So one has a regulatory border in the EU, right? One has the UK that has its own funky approach to a bunch of regulations that are technically sometimes EU compatible, sometimes not. And one has to do a delta of those two things and go, who fucked up here? And then Brexit happened. And it got considerably worse. And then there's the US, which just exists, and we shall ignore the US for now. It is much better for everyone involved if one simply ignores the US. So for our hypothetical passenger, we want to basically send from here to here. Simple, there's a rail. Both banks are already correspondents. Hey, they have an existing rail. They exist in the same regulatory space. Hell, they have like a bajillion things they could use. They could like send money over Germany. They could use SWIFT. Why would they do that? They could just use SEPA. They could use whatever other interbank clearing system exists between those two banks. And so it's easy. For our second passenger who wants to send it to here, it's a bit more complicated-ish because the banks are not correspondents. They don't have a direct link. So the question is, hey, I want to send this money to somewhere. Can someone forward my packet? And it's basically backtracing a valid. If you've tried to get from anywhere in Germany to somewhere else within the same day, and they exist in similar but distinct but not the same regulatory space, and there's a bunch of allowances that are done for this, so long as all the banks and entities involved it usually goes through kind of okay. And then for the passenger that wants to do things to the US, routing kind of has to follow like a path that involves like a bigger bank. They exist in separate regulatory spaces, so good luck. There's the Privacy Shield, which then got renamed to the EU-US Data Privacy Arrangement or something or other. The actual name is in the notes. The notes are, however, not compatible on this operating system, on LibreOffice. But there is a thing that allows the US to violate bank transfers. And this is good, actually. TM, no. And anyway, the money can travel transfer using SWIFT or whatever, but because the US banking system is so fucked, you're better off or whatever other thing you're going to use to send them money. Because otherwise, good luck using any form of like... Okay, so, example. Card provider has the actual ability to do an ACH wire transfer from... When the US do not like ACH wire transfers because fraud. Because it's thing that fraudsters use. But they're stuck with PayPal and other things. Because... or something. Oder so. This is all very... basically of the pass. And this can also be represented with other things than trains, but that's slightly less interesting. The postal system, it technically is getting up to another. But hey, what else? Sending the network to another. The internet. Just think of one side of the world to the other. It does not make it any better, but and that is actually only something that one is able to do when the bank actually works. This is also not a guarantee. And to get a working bank, one needs bureaucracy. Bureaucracy sucks, but actually it's not that bad. So either an Aktiengesellschaft or a GmbH or Genossenschaft, good enough. And this needs to be founded, and one needs a board of individuals. What was it? No. Eingetragene Genossenschaft, that's the one. And one needs to found this thing. One needs to go to a government, like a board of individuals. And the board of reputable individuals for reasons. And then one needs a license, and that's actually the harder part. And yay! German bureaucracy. This requires many documents that define plans, governance, risk management, who the shareholders are, who has capital in the initial bank, who, etc. Who has significant control. All of these things need to be declared, which actually is not that bad. One also needs money, about 5 million money in Germany. 5 million is not necessarily excessive of us, but yeah. And one can also needs to be able to prove that one can deal with the regulatory things, or else one is going to fail before one even starts. Except that one considers a bank when interacting with them don't have a banking license per se. One calls them a bank, but one could also call them neobanks or things go under other names, like label service, etc., etc. A lot of people hate for reasons that are valid. But there is technically a shortcut. Shortcut being fintech. Magical word. It sucks. It's basically white labeling. So basically putting one's product in front of someone else's bank and just saying, hey, we do the stuff and we have your accounts at your place and we do some of the ledgering and we hope you do the rest. Broadly. And they do banking. It isn't. Include For example, if one has a Revolut account, such as this one does, and has a Swiss currency account, the Swiss currency account is held by Credit Suisse. Anyways, now UBS. However, this is also irrelevant to the rest of the talk. Banking as a service is usually make weird things and pray territory. There's usually things that aren't supposed to touch that are forced to touch. And then additional stuff gets added to the mix. Why not add crypto? Sanity. Sanity is like not do crypto. But whatever. We mentioned regulatory requirements. And brief overview is one needs a license, that's the requirement. One needs to be able to side of things. Yes, we have a disaster recovery plan. One needs to report stuff to, well, the government. Or, well, the BaFin in Germany. And one needs to at least attempt to stop money laundering or prove that one does that. And also one needs to not finance terrorism. There's a whole thing in the UK about not financing. Also relevant, the UK is declaring any support for Palestine action as terrorism. The implications of that. One also needs to protect consumers from themselves, apparently. Technically, the consumer protection duty is most of the modules covering consumer protection duty and training is just how to stop the customer from actually losing their own money. That's literally that. And then there's the don't do crime, don't enable crime side of things. This is actually part of it. Thing is, most banks are also in it too. Well, not most. A lot of banks do the thing, and then crime happens somewhere because someone saw, ooh, money. And yeah. The theory allows for very little the system once you own the system, but we won't go into that. The reality is somewhat less orderly, because why would it ever be orderly? Anyways, we're now, in theory, done with the theoretical side of this. This was a short thing, but we got over most of it. The money exists, right? Yesn't. The money is in magical buckets. Theoretically, so the Agricultural Bank of China has 1% of the world's money. The Bank of America has 1%, etc. And the list goes up to 40%. Money is held by, 35 institutions or something? 40 institutions. This is from the Financial Stability Bureau. Those are the buckets that were the non-insurer buckets. This is all publicly available. The magical buckets may not be real. They may exist, and we can hope that they're not provably observable. They may or may not have the same amount of money as they're supposed to have. Money is a concept. And then someone is probably liable for that amount of money. But what are they going to do? Find a billionaire? A few measly millions? Finding a billionaire does very little unless you actually take away 50% of their money, but whatever. Actually 99% of their money. They'll survive anyways. Anyways, the money can't just walk away, right? That's the next question. Well, from a certain point of view, it just might. Depending on who you are, the money could just walk away. If you're Swiss Borg, for example, 41.3 million walk away 2 days ago. The narrative, of course, being that this was a hack of a supplier's API. Everyone got reimbursed, allegedly. And this was all fine and swept under the rug, and several creatures this one knows are now currently dealing with the aftermath of this. Standard banks are allegedly more resilient. The thing is, they just have different kinds of threats. Fake people, improper sources of funds, The usual amount of money laundering and crime stuff. And what happens if the bank goes poof, right? You have probably already heard of the 100,000 euro in deposit insurance that a lot of banks say that they have, and a lot of neobanks say that they technically have. Anyways, the insurance exists. It is a real thing that covers banks. Fintechs, remarkably, are not banks. Germany has a very specific thing where one needs to be an actual bank to have this insurance. Switzerland has the same thing. This is most common in the EU space that fintechs are not covered under this. It solely depends on the fintech's legal status. If they are really a bank, if they have a banking license, this is fine. If they do not, And yeah, electronic money institutions, payment institutions are not banks. Unless they are bank. Anyways, safeguarding requirements. And that's the thing where everyone goes, oh yeah, but they're legally required to safeguard money. Yeah, safeguarding the money just means we're putting it on someone else's account in another bank. So if we crash, the money exists. That is effectively what safeguarding is. So money is in a separate account, maybe at another institution. It's not counted as company assets, is what that is. But And so we may just talk about the technology a bit. Yeah. CCD providing us with the correct commentary. Technology used in banks is modern, right? And when a bank modernizes its stack, it's modern, right? No. Many banks rely on legacy systems, right? COBOL, yay. Or basically legacy systems from when they emerged, which is fine. The problem is, well, most of their systems haven't re-emerged in the last 50 years and are still running the exact same stack on mainframes. Who doesn't love a cute little mainframe? Some banks are actually making decent efforts, keyword and other keyword being effort, at modernizing the stack, right? So they're using modern technologies like Java. Relatively modern, yes. This is why the title of the slide is Modern is Relative. The problem is, most of the current modernization efforts in the last 5 years somehow involve this shitty thing called artificial intelligence, or also machine learning, additionally, to do things like detect fraud, and also everything else, because who needs brains when one has a ledger? Or some... Hey. Anyways, Deutsche Bank in 2010 announced that they were upgrading their core banking, something called TCS BA NCS, which is technically something that is being developed in Mumbai, and has been developed by a bunch of people and has been currently deployed in 30 to 40 world banks. Somewhat allegedly solid. Suspiciously, they're still hiring a lot of COBOL devs. Anyways, fintechs are not COBOL, right? They're Cobalt. So they're sadly also a hack job of forced interdependencies, which sucks. And in the case of white labeling, core banking systems that they're all like slapping a different interface on, a lot of them use Java. Like, of the ones that we know the technologies that are being run, 75 to 80% run Java. Run Go or Rust, but those are more in the cryptocurrency space. Anyways, we take security by a lot of companies. And then the access control is just subpar. One can cite Bunk, who employees could just see other people's accounts and what was happening on those accounts. And many employees incorrectly have the permissions to do this. And then the MFA can be bypassed. And well, as a Swiss creature, this is very hilarious, because this was actually called Operation Emmental. where a bunch of Austrian, Swiss, and other banks basically had their MFA system be bypassable by malware being installed on a customer's computer, which technically could happen to most things, but they weren't doing adequate verification of where the requests were coming from versus where the requests had been initiated. Things like that. And the thing is, it's a network of dependencies, especially if one uses like a neobank, because they're all going to offshore all of their effort of stuff, such as identity verification, know your customer, know your business, anti-money laundering. All of those things are going to be offshored to someone else, who is a leading business company, or etc. And so one has all of these providers. The problem is that a bunch of these providers are found at most banks. And that is a bad thing, actually. Because having a market leader is good, TM, but if there's only 10 market and one of them either goes down or something goes bad, it kind of sucks. And many neobanks and fintechs rely on these same providers. Anyways, those all run on Azure, right? Google Workspace or AWS or whatever. And if you don't pay your AWS bills, beep, and your bank shuts down. Which is fine, actually. It isn't, but eh. And these providers, right, are known good. They will never fail. They will do the things correctly. Anyways, this is a specimen ID. And this is Stripe. Stripe's identity verification, which failed to detect the specimen. The only reason why this was ever rejected was the date of was a date thing, right? Date of expiry, and that was the only reason why it afterwards failed, right? Anyways, Lichtbildausweis. From this creature there. Past Stripe. Last name's no Renault. Anyways. Oh, also Austria. Oh, yes. The issue date, 29th of December, 2023. This is actually, well, yes, this is actually correct, but they read it from the date of expiry. Oh, it read it from the back. Okay, cool. Anyways. Other dirty tricks may also be used. Right? Reputation farming. Just asking someone to be on the board is easy, actually. You can just ask. Some people want to be on the board of a bank. No concept. But one can do this. And one can say, well, this worked at XYZ important institution before. And this is good because they're on the board of the bank. So this is trustworthy, right? Anyways, reputation. Ghost names are also a thing that happen, where someone is just there as like a ghost. Isn't the company in any way? Allow their name to be somewhere that is relevant to the company. This happens. Omissions, where they will not exactly lie, but they will say things not entirely correct. And then relying on other vendors in an undisclosed way to simply, hey, we're running out of money. Because put certain activities of the institution. Anyways, nobody panic. We have oversight. We have overseeing bodies. This is great. The issue is regulation is actually having trouble keeping up with the newer technology. Cryptos, they're things that are just emerging and are hard to regulate. This is now catching up, slowly. And the problem is that an enforcement action is actually seen somewhat lightly. A fine of, let's say, was it N26 13.2 euros of fines across between 2022 and 2024, at which time they were already valued at 9 billion. And this was a fine. This is somewhat light. The problem is an investigation into criming takes a while. And during that time, the bank is actually legally allowed to operate unless you shut down the bank, which, if the criming is actually incorrect, and it was just a suspicion, then you've hurt a business and its customers, which is also bad. Anyway, a few crises creatures may have heard of. The Enron thing. Everyone knows Enron? It's a natural gas company, which then ended up being a hedge fund somehow. Anyways, what could go wrong? Enron is better known for a few things. Quote, confusing financial statements to the auditors. Creative accounting. And their stock went poof in like about a year and a half or 2 years, and so went to a lot of people's money. This isn't exactly a bank. However, people's money was involved in this, and it sucked. Then there's the Wirecard thing, right? Wirecard started out very questionable in 1999. Had a few technical difficulties and a kind of a social engineered stock market listing. Purchased XCOM to get an actual banking license, which happened. And then they acquired a bunch of foreign payment companies and did like a lot of gambling payments routed through that, and it was kind of sucked. Anyways, there was, oh hey, what if we did both and fraud for different people? Italian, the mafia. That sucked. Oh, and also they somehow lost some clients' cards or sent them to the wrong place or always steal the cards and then use them badly. Stuff like that. Anyways, Wirecard. There's also the M-Bills thing, which happened in or around Slovenia, which was how M-Bills that later became Petrol M-Bills that later became Petrol Pay. How come got bought out? Because they didn't want to be in EMI anymore, which is technically relatable. Who would want to be in finance? Then got rebranded several different ways. And they were also probably affected by Wirecard stealing of cards. There is then some people had a lot of opinions about basically payment processors / creatures in the great tree of our essence of we're happy with adult content and the exchange of monies for adult content because they're so good and innocent. Anyways, who is financing war? But hey. And they requested the takedown of some adult content. And itch.io just well, just mature and went like, we're putting this under temporary review because we like all at once. And like many of were scale of the company, and a lot of it was just simply incorrect. Lay something. So it's just a bunch of cards that are used for public transports and payments, etc. in Japan and Eastern Asia have had cards that have been issued since forever. And the something or other 1.6 billion 2017 maybe vulnerable to enough read right, which is bad when one stores the money on the card. Due to some weak cryptography shenanigans. Anyways, may affect over 1 billion physical cards. Anyways, it is still a developing story, just read about it in the news. And we may now close this off slowly with some final commentary. Sadly, people with money want to do stuff with money, and this is the easiest way we got around to it. We're all kind of victims of that system. It kind of sucks. Everything is kind of broken. Yes, your money is in a house of cards. The house of cards has had bolted-on foundations, has had put in the wrong places. It is coming out of the wrong side of the wall, and the switch at once What's turns on the light on the other side of the house. Are thin enough for Wi-Fi, some of them aren't. Anyway, this all sucks. All of this is basically boiled down by regulation. Complicated. This is where you... especially this is it. Thing as a QA, we know. Or does anyone have any questions? It's gonna be we have one question. Oh dear. Yep, over there.
Stopped being listed in 2020. What happened in 2020 specifically, besides general pandemic shenanigans?
Well, the general pandemic shenanigans recession happened around that time, and a lot of banks went out of service.
So instead of admitting that the entire system is fucked and may collapse, we just put a blanket over it so that people don't lose trust in the system. Am I getting that correctly?
Vaguely, yeah.
Great.
Finance is built upon lies and omissions and mistruths and incorrectness. This is just the conclusion of the talk. Finance is fucked. Congratulations, you're all unwilling participants in how fucked it is.
Are
Anyone
there
else?
any other questions?
Oh.
With the debacle on Steam and payment processors in general, I don't know how much do we want to dive into it and so on. I don't know. It's not a question, perhaps, but yeah.
So the thing with that is just some people have moral standings, and those moral standings are slightly incorrectly aligned with humanity, where most people do not care about porn, but care about their money being used to buy missiles and shit. Except banking companies have a moral Christian background, and as such, killing people for fun is easy allowed, but pornography is not. So one of those has effect on the world of small indie queer developers, and one of them does not. Picture over there. Yeet.
I guess this is sort of on the same topic as the last thing, and it's in some ways more of a comment than anything else. But I think the problem with what happened on Steam, if you like read what people like the EFF write about it, it has a lot to do with the facts that you already mentioned, with how very centralized the finance system is. That there's like literally, if two companies decide that they're worried about something, then you're just totally forced to comply as a company, because otherwise you can't get payment. And
it's why they unlisted
Yeah.
everything first and then went through manual review instead of just taking the time to do it and then being dropped.
Yeah, it's not just that like some people have shitty morals, it's that we also don't have a diversity of payment providers,
Yeah.
so that some payment providers have better morals and we can just use those instead.
EFF has many bad takes, but that is actually a good one. You had a question? Yeah. Or there's one up there.
Hi, so this is also relating to the itch.io thingy. So I don't remember there being backlash against itch.io specifically.
Oh, there was a
I
ton
have
of,
only seen backlash against the payment processes for forcing them to take it down.
going like, oh, why aren't they using or they building one? And it's like, it's a 3% company, you know?
I guess I'm seeing this as a sign that I'm on the right side of the internet.
Yeah, probably. We all exist in funny little bubbles. And sometimes one has to leave them to do things like finance. We'll do the one last question and then we will be chased out.
Yes, of course. A lot of bad financial bad technical systems were talked about, but how about the ones with even worse systems? Have you seen things like, for example, a JavaScript-based backend, or
Listen, at least if it's using JavaScript, they probably haven't run npm install with new dependencies recently.
That is both reassuring and terrifying.
Yes,
Thank you.
They're running npm packages pinned from 2008. It's safe. What?
All right, then I want to say thank you for Maya for its presentation, and thank you all for listening.
Yay.